First of all, your thoughts on the numbers. For me, what really jumps out is the month-on-month numbers. But for you, what were most important in the numbers that were released?
Well, I think the most important point about the headline numbers are that they will be fairly reassuring for the monetary authorities. We have to remember that the CBN's in-house forecasts, according to the Monetary Policy Committee, were a peak in Q3 of 14.5%. Well, we're 12.7% in the latest numbers. So I think this will reassure monetary authorities, and it will obviously guide them in their policy, interest rate policy, going forwards. I think
that's a strong point you're making about their expectations. Like you noted, they were looking at 14.5%. So would you say that there probably no need for tightening at this stage? Further tightening, I mean.
No, I don't think so. I think how we see it is that the rates will remain on hold for the greater part of this year, and we think that if inflation starts to show signs of easing year on year later in the year, our call is that there could be a small reduction, and I stress small reduction, towards the very end of the year. So I don't see tightening now. Of course, there's a related issue which presumably you want to ask about, which is the exchange rate. And if things go badly there, then of course everything is up in the air and all bets are off. But that's a separate issue.
Absolutely. You hit it right on the head there. I was going to come to the weakness that we're seeing in the naira and your thoughts on how this might impact inflation going forward and, of course, monetary policy.
Well, I think, it's no secret that the flaw of macro policy in Nigeria is the vulnerability of the fiscal and external accounts to the oil price. And, we know the oil price has come off about, at least on the Bonnie Light side, up to $20 per barrel in recent weeks. Now, were this to continue, were the slide to continue, then some more adjustment would be required, and the adjustment would include some fiscal measures, and at some point it would include some monetary measures. But this is not something which the CBN is in any hurry to do if it can be avoided.
All right, let's take it to the markets and look at the impact that the inflation number may have on bond yields. I mean, a 2.2 percentage point change is not something that I think would move the markets a lot. But where do you see bond yields going in the current environment?
Well, our take is that the trend on bond yields, the broad trend going ahead, is slight falls, but nothing very dramatic. Again, subject, of course, to the exchange rate story, but without any shocks there, our take is that you'll see some slight easing on the yields, but as I say, nothing very exciting.
All right, let's look at the broader macro story and, of course, the GDP numbers that were released during the Monetary Policy Committee meeting. Some concerns around a much lower figure for Q1. What are your thoughts on GDP going forward?
Well, I think, of course, we should say, first of all, that Q1 is generally the slowest quarter of the year on year basis. That's the first point to make. But of course, yes, I mean, look, it's well off where we were 1 year previously, i.e. Q1 2011. And, Nigeria is a part of the global economy. So, there is obvious influences coming through from the weakness of the global economy, particularly, which now actually you can see, you see overwhelmingly, of course, on the developed world, but there's lower growth in BRIC countries now. So I mean, I think that's probably the underlying point.
And let's look at the impact of Europe, Greece, all that's happening where you are at, and give us a sense of the impact that you may have on the economy here.
You've gone a bit more faint now. Anyway, but the question I heard, the question is about Eurozone Greece. Well,
that's right.
The Eurozone story, the Eurozone, our view is that the Eurozone, like the European Union, is created by politicians. So one result of that is that national governments are influenced, and as a result of that, what we're having is a series of let's say half measures to try and sort of steady the ship. But in the absence of the largest measure, and the largest measure, of course, would be a very large firewall of protection. Now, that's not coming because some of the national governments are reluctant to approve it because it would impact upon them. Now, that's, of course, that's largely Germany, but not solely Germany. The impact on Nigeria is, well, the impact on Nigeria is largely through the oil price. This is Nigeria's vulnerability. The Eurozone this year's current forecast, yes, the Eurozone will be contracting. Growth will be negative in the Eurozone for the current year. But I think the question really is at what point are corrective measures taken? In the event of no substantial corrective measures being taken, all bets are off. Specifically Greece, you ask about. Well, this is a personal opinion. I mean, my personal opinion is that one way or the other, Greece is going to leave the Eurozone. And incidentally, I don't actually think that's a bad idea for Greece, as it turns out. Yeah. But the question follows from then, of course, is contagion to some of the other weaker markets, particularly in the southern Mediterranean area. Well, there's huge fragilities there. And in the absence of the said firewall, which I mentioned earlier, these fragilities and uncertainties are going to continue.
All right. You did mention the oil price and the impact that may have on Nigeria. Final point for me would be your thoughts on how prepared Nigeria is to absorb any shock we may see or further shock in the oil price.
Again, you were very faint, but the question is the direction of the oil price and what could happen to Nigeria. Well, as we know, the price is touching, well, roughly 100, let's say, $100 per barrel for the Nigerian marker crude. Yes, look, if the oil price plunges, Nigeria's defences are very weak. Look, we can't ignore the fact it's official. It's said officially, in all sorts of fora. The price plunges, then you have huge problems on the fiscal side and on the foreign exchange side, on reserves, on the exchange rate. So what's the response? Well, I mean, I don't think there's been much progress made since we were in a similar situation, which was 3.5 years ago, Q4 2008. What happened then? Okay, different CBN leadership, but what happened then was a series of administrative controls, and ultimately, an effective, massive depreciation of the currency.